Hey, good morning, everyone. Today is Monday, so I'm doing our weekly webinar. All right. So let's start with our dollar index. Nothing much changed, right? This is a monthly chart on the dollar index. We can see that dollar is in the sideways. We go to the weekly, and we can see we are actually on the weekly supply right now. All right. Go to the daily, we can see a lot of weakness, a lot of supply coming in on selling the dollar, right? Okay, so that's what we get from the dollar index. There's really nothing much that we can get out from this dollar index right now. Let's move on to our measure. The first one I will talk about is the pound dollar, right? So pound dollar, as a swing trader, we always start from a money time frame, right? As you can see, the money time frame, we are basically in no directions. Right, not much change from the previous last week webinar. We are still in this you can see this whole range, right? We are still in this block, right? So we are still in the no directions on the money time frame. So as we go to the weekly, right, we have some movement there. So monthly we are in the no directions. Weekly I say that we are no direction. Okay, let me show you why. Yeah, I draw the trend line. Right, you can see that. Okay, give me 1 second. I draw the trend line from the most current 2 RP, right? So this is 1 RP, and this is 1 RP. Okay, so I connect these 2 RP together, and I form a trend line. Okay, can you see that? That's a trend line. Okay, and we can see very clearly this trend line has been removed. Right, has been removed. As you can see that we have a full candle close below the trend line. Therefore, we say that this uptrend is over. Right now, we are in the no directions. Right, so weekly we are in no directions. Monthly we are in the no directions. Right. So the moment we know that we are in the no directions, right? Basically, we have three kind of setup. The first setup is the trend setup. Right, trend setup. For a trend setup, we need to trade in the direction of the higher time frame. Okay. Now the second kind of setup is, what if the higher time frame is in a no direction, like what we have right now? Then we go into the location setup. Okay. Once the higher time frame is in no trend line remove example, we are now in the location setup. Okay. The third setup, of course, is the trend plus location. Alright, so these are the 3 setup that usually we come when we look at any kind of currency pair, right? Or even for the commodity, gold, silver, right? If we trade gold and silver, we always look at the higher time frame, and then we decide what is the trend on this particular pair. Now, if the trend is the no directions, then I should be looking for a location setup, right? Location setup meaning that I can look to buy, or I can look to sell. It all depends on where is the price, right? So I'll be looking to buy if the price is very, very low, near the weekly or the monthly demand, and I will be looking for sell if the price is high on locations, which is nearer to the weekly supply or the monthly supply, right? So for location trade, basically I can look for buy or sell. It depends on where is the price. Then the next thing is come to the entry. The next thing is come to the entry. Now, if in location trade, we mentioned that we cannot put a pending order like limit order, right? We have to use a confirmation entry. Okay. Basically, we have 2 type entry: limit entry, buy limit, sell limit. Right. The second type entry is confirmation entry. Right. And in our rules state that once it is a location setup, right, we have to use confirmation entry in a lower time frame. Right. So you can see that our trading plan is It's very simple. That's it, right? You don't have to be very, very complicated. We always look at a trend. Now, as a swing trader, of course, we will always look at a higher time frame, the monthly, the weekly, as a higher time frame. Now, if you are an intraday trader, then you'll be looking at the daily and the 4-hourly as your intraday higher time frame. Look for the daily trend. What is the daily trend doing? Is it in the uptrend or downtrend or no directions? What is a 4-hour time frame doing, right? And then you just follow what I've just shared with you here. Understanding what the higher time frame is doing will bring you to the next step. What kind of setup is this, right? Understanding what kind of setup will also tells you how you're going to enter, right? If we see a trend setup, obviously we are going to use the limit entry, right? In the uptrend, we will put our buy limit at the demand, right? In the downtrend, we will put a sell limit on the supply. Okay, so we have once we know what kind of setup it is, and then we just go down to the entry time frame, right? For swing trader, our entry time frame will be the daily, right? So our monthly and the weekly, these two belongs to the higher time frame, and this daily is our entry time frame. All right, for intraday trade, daily and H4 is our higher time frame, and we look to enter under H1, which is our entry time frame. Okay, so it doesn't matter whether you are trading doing as a swing trader or whether you are an intraday trader. We always follow this plan, this concept, right? So right now, if we just go now, we come back to our pound dollar. You can see that this trend line removed, right? So now I can remove this trend line. I don't want to be obstruct my charts. I know that I have a location set up, right? You can see that I know I have a location set up. So now what I do is, now I ask myself, the current price is here, and my supply is here. My weekly supply is here. My daily supply is here. Now, is the price low or high? Obviously, it is low, right? Anybody will look at it, will say it's low, right? Location is low. So I'm more inclined looking for buy rather than sell, right? So now knowing that I'm going to looking for buy right now, then I go to my entry time frame, the D1. In the D1, I too recognize or identify the supply and the demand, right? So I identify my demand here and my supply, right? And from here, I know that I'll be looking for this demand to buy, 86 demand, right? And knowing that this is a confirmation entry, I will not able to put a buy limit here. No, I won't do that, right? But for people who are very aggressive, if you say that, okay, I don't have the time for the next few hours to sit in front of a computer whether to get a confirmation entry and see how the price react when the price drop to this demand, and they say I want to put a buy limit there. Of course, that is your choice, right? Okay. So what I do is, we have identified a daily demand which is sitting inside this weekly demand. So this is what we call the LOL, level on level. And this is also what I usually like to say. Our daily time frame is leading against AN, should be LEAN, leading against a higher time frame, which is the weekly demand, right? We are borrowing the support from the higher time frame weekly, right? If we're going to buy here, so this kind of concept is very important, right? We always want to buy or sell at the supply or buy at demand, where the supply demand has the advantage of leading against a higher time frame. In this case, we have the daily demand resting or leading against this weekly demand, right? So we like to look for a buy, right? So we have to use a confirmation entry, right? So now we can go to the H4 and wait for the price to drop down, right? In the H4, right? In the H4, you might see that, okay, well, I have something here. How about here? Right, there's 36 pips, right? So again, you can say that, okay, I want to put my buy limit there. Okay, it's up to you, right? And trade this 36 H4 demand. Or alternatively, what you can do is just wait for price to drop into this demand, right? And see what you do. We come back again and get in with a confirmation entry, right? When the price finally drop back, retrace back to this level, your order is there, buy limit is there, trigger. That's confirmation entry. Okay, so this is what we will be looking at for the pound dollar. Yeah, I think this is very, very clear, right? It's very clear to you, right? I hope. Okay. Okay, let's move on to our euro dollar. Euro dollar. This is my euro dollar. Okay, it's here. Okay, same thing. We start from our money time frame. What is the euro dollar? What is the trend of the money? Downtrend, right? We have money. We are in a downtrend. Okay, money down. Then we go and take a look at the weekly. Now, weekly, are we up or down? Right, you can see that if we draw a trend line, previously we draw a trend line, right? It says RP to RP. I can't really get a good RP. RP to RP. Right, we break a trend line. So this downtrend is over, right? This downtrend is over because we have a full candle close above the trend line. So we were in no directions, right? No directions. Now from no direction, somebody will say, now I have two swing high, two RP to connect. This is a common problem faced by a lot of traders. They say that, okay, now I can join two RP. Am I in the downtrend already? Right? They say, okay, well, this is the RP, and this is the RP, right? So I think I have two RP to join a trend line, so I'm in a downtrend. Okay. The answer is no, right? Our definition of a downtrend is very, very clear. Once we are in a no directions, in order for a no directions to develop into a downtrend or become a downtrend, we need two demand to be removed, right? So you can see the price actually rally up, go sideways. Have we removed any swing high or demand yet? We have not, right? First one is here. Right? We have not removed any two demand, so we can't say that we are in a downtrend. We are still in a no directions, right? So now on the weekly, we are in a no directions. Okay, you can see very simple. So what kind of setup is this right now? By looking at these two higher time frame trend, they are in a no directions. Immediately we can say that we have a location setup again, right? So now location setup again, we can buy, we can sell. It all depends on where is the price, right? Where is the price? So now what we need to do is we need to draw our supply demand, right? So let's draw our supply demand from the current price. If I'm going to draw the supply, I look up, right? From the current price here, if I look for supply, I look up. All right. There's a supply there, right? Is this supply validated? In order to validate it, it has to remove a swing low or a demand, whichever, right? So have we removed the swing low? Okay, looks like we did, yeah? Okay, so we have removed a swing low, so we can say that, well, this is my weekly supply. Very easy, right? Weekly supply. Now to look for demand, we work from the current price and we look down. Now where is the ERC? Boom. This is not an ERC, but this is a rally based rally, right? So we actually come in contact with the first candle, which is a demand, right? Which is a demand. So we draw our box on the demand. This is demand. Right? So now we have a weekly supply, weekly demand that we draw on, right? Now based on this current price right now, already you know that we are low on location already, right? Between the supply and demand, you know that we are low on locations. So what can we do on this pair? We look for buy, right? We look for buy. Now we go to our entry time frame, daily. Okay, so this will be a location trade. Location setup. Okay, third thing. Avoid the kind of stuff. Okay, location setup, right? So now we are now on the daily time frame. We have identified our weekly supply demand. Now we need to look for. I'll go to our entry time frame, which is a daily, and we look for entry. Now where are we going to enter? We are not going to enter at the weekly supply, right? Weekly supply is so big. You can see that this is a weekly supply, and the weekly demand is so big also. Right? So we are not going to buy at the weekly supply demand. But what we can see from here is we need to identify where our supply demand, right? So we have RP. Okay, we just join it on RP like this. Okay, we have no trend line break yet. We don't have a clear break yet. And now where's our supply demand on daily? Now from the current price, these are current price, right? To look for demand, we drop down. We ask ourselves, is this a demand? Is this a demand? Right? So in order to qualify this is a demand, validate this is a demand, there are few conditions. The first one is it has to remove a trend line, right? Which we see that we have not removed yet, right? That condition didn't match. So this one didn't match. Second condition, this demand, potential demand, it has to remove a supply or swing high. It has to remove supply or swing high before we can take that as a validated demand. Okay, so these are the only two conditions that we need to be met. So have we removed any supply or swing high? Okay, now look at this. Usually people will look at this. Okay, this is the one. Have we removed that? Not yet. So therefore this is not a demand, right? But if we pay attention to this area, right? See now, has this price from here to here remove any supply or swing high? It did not remove this swing high, but did it remove this supply? This drop, base drop. It did, right? So this is validated. This is a validated demand. Can you see that? So this will be our daily demand. Alright, I can see clearly the price drop during the Asian market and it rallied, right? So if you have been trading here, trading this pair, you already make about 100 pips. Can you see that? Nice profit, right? Just based on simple supply demand order flow trading, we already make about 100 pips since. Of course, sorry, not more. This is a daily time frame. I take it as an intraday, right? But you can see that this is 3 days ago, which is last week. Market dropped into this, and it rallied off, right? Now, where's we're looking for buy, right? Because the current price is kind of low. Now, we also need to identify where is my daily supply. So we look up. Look, this kind of wick we are not interested, right? We look up again. No. It's long wick, but this is kind of big. But we don't even have 1 to 2. If we come here, you can see that this will be a line 1, this will be a line 2. It doesn't have 1:2 to this, right? So we are not allowed to sell this one. Look up again. How about this one? Okay, so that will be our more obvious, better supply control. This one. So we have a supply, we have a demand, right? So right now is we have missed the opportunity here. So looks like price will continue to rally up, right? Until you come here. Then we might see the price start to come back down again. Okay. So as a swing trade, I think basically we have missed the opportunity. Now you can then develop. How about H4? How about intraday trade? Any opportunity? Now on the daily, we are in a no direction, right? For hourly, we have break the trend line. and that is our demand. Okay, see how the price dropped down, rally up. Okay, so that is a confirmation entry. Now we have another demand here, but this demand doesn't have 1:2, right? So what can we do? We can go down to a low time frame. Now we are in a H4. Now we go to H1. So in H1 we can see that we have another demand here, okay, which is 35 pips. So now we have from here to here, and from here to all the way to here. Now we have more than 1:2, right? So we are allowed to take this demand as an intraday trade, right? So let's wait for price during the London market today, see where the price come back here, and we'll be looking for opportunity here to buy. Okay, because if location is low, we are looking to buy, right? And when we talk about location, we always look at the location on the monthly and the weekly. Of course, the daily also play a part, right? Okay, so basically, again, these are two examples just on pound dollar and euro dollar. You can see that we have very simple step and walk you through how we actually can look for a trade, right? Using supply demand. Okay, next one is the euro dollar, right? Euro dollar, you can see that monthly we are down, weekly we have price arrive on this weekly demand. You can see weekly demand. Okay, and we see the price start to rally up since last Friday after the Australia Central Bank, right? I think they keep the rate unchanged or something at 2%, right? Now we have a reversal pattern here. That's what we call the morning star, right? These three candles form together as a morning star. We can expect price to maybe retrace a little bit higher. So for intraday trade, now if you're going to do for swing trade, basically I'm not allowed to do anything because the money is down, weekly is down, and we are in a low location. So what can we do? We can't do anything. How about daily? We go to the daily. We can see that we have weekly, we have a morning star. We go to the daily, we spot a demand, right? We spot a demand which is a rally based rally. We can wait for price to come back to this area and buy. But the problem is we do not have 1:2 yet. We don't have, right? So what we can do, we can't trade this daily demand, right? So we have to go down to one time frame lower, H4. When you go to H4, you can see that this line is our daily demand, right? Daily demand. So when we go to H4, we have another demand here. Again, this demand, H4 demand, doesn't have 1:2, right? So we are again not allowed to trade this one, right? Okay, not allowed to trade. H4, H1. Now we have a demand here. Okay, now this demand we have 1:2 now, right? From here. Intraday trade, H1 as an entry time frame. See, until this candle high, right? We should have more than 1:2, right? So we are waiting for price to drop here and look for buy. Let's go back down. Okay, that's for Aussie dollar. Okay, same strategy what we're using, right? We just have previously for the previous two pair, we are using a swing trade, and Aussie dollar. This can be a intraday trade, right? Intraday trade. Next, move on to the New Zealand dollar. Monthly we are down, right? And then you can see that we have the demand is here. The price came into this demand, right? Weekly down, daily, right? So we are actually daily basically no direction. So in this example, right now we have Monday down, and we have weekly down. Okay, so we should be looking for sell, right? We should be looking to sell because higher time frame all point to us that we are down. Okay, so but the problem is the current price is too low, right? We actually came straight to the monthly demand, so we are not allowed to sell at the current price level. But if the price decide to go back up, of course we can look to sell and we expect price to come back down, right? So we have to wait. Either the price retrace higher, we force to sell, or wait for price to remove this demand and we start to sell again, right? So for New Zealand dollar, this is our plan, right? And we expect on the weekly, we expect price to rally up higher, but I can't see any clear imbalance of supply, right? Unless the price can rally all to this area, right? Otherwise, all this looks no good. Okay, so New Zealand dollar, there's really nothing. I do not want to buy because I'll be trading, doing a counter trend, right? I will only look to sell. Okay. Now, if I use the intraday trade, do I have any opportunity or not? Now, intraday trade, you can see we have daily time frame, which is the no directions, right? Intraday trade, no directions. Okay, so daily is no direction. Then we go to the H4. For H4, we have removed one swing high. We are actually in the uptrend, isn't it? We have removed this, right? Okay. We have removed all this, right? Looks like we are in the uptrend. Okay, so daily we are in the uptrend. Now for H4 we are in the uptrend. Okay, so daily no direction, H4 uptrend. We can look for buy provided we are low in location, right? So right now what we can do is, it's very easy. H4, this is the demand, here you go. Okay, we have a demand here, okay, and the supply is way up here. Right, so what we can plan is wait for price to drop to this area and we do buy and expect price to, okay, because daily is in a no direction. Okay, in the H1, we even have another demand on H1, you see that, which is within the H4, 19 pips, right? So we wait for price to drop into this area and look for buy. Okay, so that's the New Zealand dollar. Next one is the dollar CAD, right? Dollar CAD start on monthly. We are uptrend, right? You can see that dollar CAD has removed this. We are uptrend. Looks like market is going up again, right? As a swing trader, we are uptrend. Weekly, again, right? Uptrend. So we can only look for buy for dollar CAD, right? Dollar CAD, we only look for buy. But we are not going to buy at the current price because it's way too high. We just want to wait for it to drop back. So our weekly, so we work from the current price here to look for demand. We just drop down, and there's an ERC. The base of the ERC is this one, right? So we have a CP demand there. Okay, that's our CP demand, 211 pips, very very big, right? So we are not going to trade that demand, right? It's very big. And if we draw the trend line, this demand is above the trend line, good, right? So we can trade that demand, but it's too big. We need to go down to the daily. So in the daily, we are expecting price to come down to this area. We have two areas, right? Two areas of demand, daily demand within the weekly demand. These are the two areas, right? So we are expecting the price to drop down to this area and look to buy, right? Or look for buy here. Okay, I would not so inclined to look at this buy, because when the price drop to this area, right, and if you go to your higher time frame, you realize that this is actually very very high. Yeah, let me draw for you. Okay, these two dotted line. If you go to the weekly, you can see we are buying. If you buy at that level, you're buying at a very high price, right? So I will wait for price to drop down further, right? When the price drop down to this demand, a trend line would have been removed, right? You can see the trend line would have been removed. Therefore, we have to use a confirmation entry in the lower time frame. Okay, so that's the dollar CAD. Okay, dollar CAD. Let's move on to the last one, which is the dollar CAD, right? Dollar CAD. Oh, look at the oil, keep coming down. Dollar yen, so last pair. Dollar monthly is up, weekly is also up. Alright, so we are looking for buy. Monthly, weekly. There's some kind of demand there. Okay, we're looking for buy for dollar yen, right? Should the price drop down to this demand on the daily or here? There are two areas to look for buy. One here, two here. Again, go in with confirmation entry. All right. So basically, we have covered all the major pair, right? And also have talked about all the potential entry level and potential trade should the price go to the level, right? Remember some of the trade that we have to use confirmation entry. Okay, yeah, okay, and that's it. Yeah, thank you, and see you again next week. Bye.